Welcome. This video is going to examine the economic growth trajectories of the two most heavily populated countries in the world, China and India. In fact, both of them have 4 times as many people as the next largest country, the number 3 country. So what has occurred over the last few decades is a difference between moderately rapid growth and very rapid growth, and we're going to delve into why India really cannot catch up with China at any point ever again, even though India was not really behind China until a surprisingly recent date. So I'm going to these charts from Google. I will have a link to this in the description box. So this is the per capita GDP of both China and India in nominal terms, so direct conversion of their currency. Nominal is ultimately the most important because that is the price at which worldwide purchases such as oil and other commodities are done, and also what governs trade balances, which we'll also talk about. As you can see, both countries were very low. These were two of the poorest countries in the world in 1960, even poorer than sub-Saharan Africa. And they grew slowly, but still were kind of equal despite the very different political systems and histories for both countries in the 1960s, 70s, and 80s. And after that point, China, which underwent economic reforms in 1978 and completely changed the way they managed their economy, it took a few years for those changes to ripple through their economy and create the stage for much higher growth. It then suddenly took off, but only in 1993. It was not really decisively ahead of India until 1993. In 1993, the future trajectories of both countries looked kind of the same. And then it just went completely ahead. And keep in mind that this is a logarithmic scale here, a logarithmic scale. China is just completely further ahead of India despite having only diverged a relatively short while ago. 5,000 years of history in both countries, and China only pulled ahead in 1993. So to look at this a slightly different way, we go to per capita GDP PPP current, and PPP only starts in 1990. They don't calculate it further back than that, and you get much smoother lines here. But as you can see, China was behind. It was behind India until 1993, and only then pulled ahead. Now, what are the reasons for this big divergence? Well, excuses often used in India are that India is a democracy and it takes too much time and too much procedural red tape to get permits to do anything, and therefore any big projects cannot really be done. And while there's some truth to that, I mean, all the most prosperous countries in the world, such as the United States, Japan, Germany, are in fact democracies as well. The real reason is for two things that were very much in India's control. One, literacy. India did not invest in basic literacy of its people. China dominates world manufacturing and created a lot of jobs for people who were only semi-educated. India had a vision of going directly from an agricultural-based economy to a service-based economy, and that might have been possible with a much more educated population, but since India did not invest in primary education to nearly the same scale as China, China has close to full literacy and has had that for some time, whereas India still does not have full literacy at all. This aspiration was unviable. And the second failure of India was an extremely low-level investment in public health. India spends only 1% of its GDP on public health, whereas the countries of East Asia, including China, spent 3 to 4% of their GDP on public health when they were at a similar stage of development. So these are the two things, in fact, holding India back to this day. Now, speaking of similar stage of development, note where India is as of 2018. Unfortunately, the Google charts are not updated beyond 2018 yet. And you can see that it's kind of at the same level that China was at in 2008. So India is kind of equal to what China was in 2008. However, since China's growth rate has been faster, it will take India more than 10 years to go from where China was in 2008 to where China is in 2018 on this chart. Instead of 10 years, it might take India 12 or 13 years. That's not too bad, given the accelerating rate of economic growth that we're familiar with. It will still emerge out of its status as a poor country in a matter of years rather than decades, but Nonetheless, the subject of this video is how and why it fell so far behind China and why India no longer has any chance of ever catching up. Which brings us to the second metric to look at, which is the diverging strength of the currencies of the two countries. So let me pull that screen up. This chart will also be in the description box below. It only goes back 10 years. I wish it went back further, but even 10 years is enough to illustrate the point. India's currency, the Indian rupee, was of a certain strength 10 years ago, and it took only 6.72 rupees to buy one Chinese yuan. But now, today, it's about 11.4. So that's how much the currency has weakened, maybe 40%. Most of the damage was done in the first 3 years of this period, 2011, 12, 13. Relatively stable since that time. However, when India's currency weakens by 40% in relation to China, of course, India is not going to be competitive as an export economy relative to China. This rather dramatic weakening is in fact a large part of the whole story and shows how even if India delivers an impressive headline number of growth, such as 7% GDP growth or something like that, there's a lot of innate structural weakness underneath the surface, and therefore India's growth is of a much lower quality than China's growth, and therefore a lot of secondary metrics show India to be substantially further from China's economic strength. And a weak currency should help India be more of an exporter, you would think. But alas, that is the bigger problem that we are going to look at next. This website is quite useful because it shows trade balance as a percentage of GDP, and even better, you can just click over countries with your mouse so you don't have to sift through a lot of small countries to find the ones you're looking for. So China has a trade balance of almost 3% of GDP, and that's a positive trade balance. It exports much more than it imports, and we all know that. India, by contrast, is the opposite. It has a trade balance that's minus 5.5% of its GDP. That is not good at all, and the huge difference between the two is a huge portion of the problem. China has plus 3, India is minus 5.5. India imports more than exports, and the cheap oil revolution that I speak about in other videos on this channel helped both countries because both countries were very large oil importers. However, China was able to do more with the fact that the oil it was importing cost half as much as before, whereas India was not able to do a whole lot. India got a very brief boost from that lasted a couple years. It used up the tailwind associated with that and again defaulted to a status quo of a trade deficit and mediocre growth. Now the only technologies remaining that might provide India with another tailwind of a couple years are electrical vehicles and solar energy, photovoltaics, because India is in fact a leader in photovoltaic energy because of the latitude that it's at, and that could enable India's transportation to be dependent on domestic energy sources rather than imported oil. But again, that would give India another couple years of high growth, after which it will revert back to the status quo of lower growth. It will never fix those problems until it addresses the education and public health issues that I mentioned earlier. Coincidentally, the United States is also a trade deficit country with minus 4.3% of GDP as its trade balance. So there you have it. The two countries were about equal in prosperity. As recently as 1993, China has zoomed ahead completely. And the total GDP of China relative to India, and the countries have a very similar population, is about 5 times higher than India in China's case. The gap between China and India now is tantamount to the gap between the United States and Brazil, for example, even though the two were equal a long time ago. India has completely failed to grow at a rate that warrants being called a high growth economy or some rocketing emerging market. And I will have other videos on this channel shining some daylight on the myth of emerging markets in general. And not just India, but pretty much every emerging market except from China. China is the only country that has really transformed its economy in the last 30 years and jumped up the rankings. But I hope you found this content informative and learned something from this video. Thank you for watching.